Welcome to Volatility Trading Strategies, and this part 3 of the VB Threshold Strategy Replacement Series. Now, just to get everybody up to speed here, there's 2 videos you need to watch, and I'll leave links for both of them here. The first is a breakdown of my Volatility Barometer, which is my own self-designed index. It's gathering data from every corner of the volatility complex and combining it all into a single value. And the second must-watch video is a full explanation of how that Volatility Barometer value is used within my VB threshold strategy, which is essentially a tactical rotation strategy. I divide the market up into 5 equal 20% sections. And then from there, whatever the volatility barometer value is on any given day, I hold the ETF that offers the best risk-adjusted performance. From bottom to top, TLT, ZIV, SPY, TLT again, and then VXY in the highest volatility environments. And the combined result is very smooth performance with exceptional risk management. I'm essentially matching my trade position to the current volatility environment for maximum results. So check out both of those videos when you have a chance. Now, this replacement series is where I go into more detail, break down each of those 5 sections, and offer potential ETF replacements for anybody who is looking to tailor fit this strategy to their own level of risk tolerance. So please subscribe to the channel, hit the like button for me to help me with the YouTube algorithm, and let's get into TLT replacements. So like I said, today I'm going to be showing possible replacements for the TLT, which is 20-year US Treasuries. This position is held anytime the volatility barometer is in the 60 to 80% range. And for that range, TLT is my chosen ETF for a reason. You can see here it's been quite a consistent performer. Since inception in 2011, the barometer has spent 17.38% of trading days in this 60 to 80% range. And holding TLT shows a total return of 43.85%, with a maximum drawdown of only minus 14.18%. So I have no complaints whatsoever with this. Remember, this is when the market volatility is elevated, so getting any return at all here is worth it, especially if it's done with manageable drawdowns. But I do know there's some active traders in the VTS community who like to mess around with the numbers a little bit and see if something else offers more potential. Now, of course, I've run the numbers and live traded this thing every which way for years, but far be it from me to tell you what your level of risk tolerance should be. So I'm happy to show you some data for different ETFs here. Now, a little spoiler here, I will be talking about gold as the most viable replacement, but I have a lot more to say on the subject of gold, so I do want to put that last. So this chart here is showing performance using the S&P 500 instead, the SPY ETF. Again, this is only holding for 17.38% of trading days, and not even very advantageous days at that. Elevated volatility, this is when markets can be pretty hit and miss, and that shows up here with the SPY. It is still positive at a total return of 15.21%, but with a drawdown larger than the return at minus 18.35%, clearly TLT is just better across the board. Another market bullish position you may be wondering about is short volatility through the ZIV, one of my personal favorite ETFs. But it's clearly not suitable for this higher volatility range of the market. Very small gain, huge drawdown, obviously a complete non-starter. But if short volatility was that bad, maybe long volatility will be better. Well, this is the VXY, which is essentially the opposite of ZIV. And while this is very consistent, unfortunately it's just consistently bad. So it does seem like neither short volatility nor long volatility are suitable for this 60 to 80% range. And we've also ruled out the S&P 500 with the SPY. TLT just crushes all of them, so we're done here, right? Well, not so fast, because as I alluded to before, there is one potential replacement here that is quite good, and that's gold. This is the chart for gold using GLD. And this is pretty impressive as well, and I think basically on par with the TLT. It really only had one period there with any serious variance. The rest is pretty smooth. Now, this is a little bit of a tangent here, but that chart showing the GLD as a replacement, in my opinion, shows the robustness of the volatility barometer signals. Because if you've followed the price of gold, you'll know that it had a really ugly stretch of performance there from September 2011 through the end of 2015. During that 4-year stretch, the price of gold dropped from a high of about $1,900 per ounce all the way down to about $1,050 per ounce. That's a 45% drawdown. Here's a comparison. The benchmark buy and hold gold using the GLD is in black, with a total return of just 2.92% in the last 8 years, and a maximum drawdown of minus 45.56%. Gold has really struggled during this bull market. It's only recently come back to life. But using my volatility barometer and only holding gold when it's the most advantageous, that's during that 60 to 80% range of values, again corresponding to only 17.38% of trading days in the last 8 years, that gives a 35% return, with less than a 15% drawdown. I don't know about you, but anytime I can hold something 1/5 of the amount of time and still outperform the benchmark by that much anyway, while also avoiding most of the drawdown, that's a trade I'm going to take every single time. From a risk-adjusted perspective, it's not even close. And this is only possible, of course, if the signals themselves are accurate. Filtering the best GLD signals here proves that. And the rest of the strategy is the same. By only holding the best ETF at the most advantageous time, most of the ugly action that all asset classes suffer from time to time can be avoided. And what's left are the trades worth taking. But back to the main comparison here, the TLT, which is the ETF that I use, versus the GLD, which in my opinion is every bit as good as the TLT. We're really splitting hairs here to decide which one is better. The rate of return and the maximum drawdown are very close, so you really could go with either one. And that's the point of this ETF replacement series, to give you the data so you can make the best decision possible to use the ETF that best matches your own level of risk tolerance and your own market outlook. There's plenty of traders out there who feel very comfortable holding the TLT anytime stocks are deemed to be too risky. I'm in that camp. That's why the TLT is my chosen ETF. For me, anytime volatility gets elevated, which is when that volatility barometer value goes about 60% or higher, I feel pretty good in bonds. But there's also lots of traders out there who are always looking for reasons to get into gold. They may have a really good long-term outlook on the shiny metal, and they do want to own it. But the problem is, and I think just objectively speaking, gold is not a very good long-term buy and hold investment. That 45% drawdown from 2011 to 2015 is far from the only rough patch in gold. It's a very volatile asset class. But having those signals filtered for the highest quality using the barometer values, that might be very useful for somebody who wants to hold gold, but just isn't crazy about those massive drawdowns. So personally, I'm going to stick with the TLT. That's what I've always done. And now that the Fed is actually back to cutting rates again, I see no reason to change that now. But as I showed, gold is technically just as good as the TLT. And I think it also fits in quite well with the overall philosophy of the VB threshold strategy. So of course make your own decision, and I don't think you could go wrong with either of these. So if you're interested in this strategy and want to give it a little bit of a test drive, head on over to my website, claim your free trial, and see what the VTS community is all about. You're always invited. Thanks for watching. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS investing community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time.